Let's also welcome on board Viren Prasad Shetty, Executive VC at Narayana Healthcare, joining in on the show right now. Viren, apologies to keep you waiting. We were just marking Tata Technologies and the IPO from the Tata stable after almost 2 decades. But let's talk about your business. And, the street seems quite happy with your Cayman performance because after 4 to 5 years of initial underperformance, this business not only witnessed a turnaround, but now I believe contributes 40% to your EBITDA. How do you see the rate sustaining in terms of realizations per patient, etc.?
Well, you just also have to remember that Cayman Islands for us is a very, very small market. I visited a tech park yesterday, and the entire number of people working in that tech park is greater than the population of the whole country. So this is a temporary thing. There's a lot of latent demand for healthcare in the Cayman, but being a small population, we cannot sustain these growth rates. Now we're adding and expanding the number of specialties that we are offering. We're offering oncology, daycare, pediatrics, NICU, orthopedics in a new facility that's a lot closer. So that obviously should bump it up a little bit. But with mature populations and stable countries, these things can't sustain the way it is in India.
Good morning, Nikunj also joining in. Now, your whole investment into Cayman Islands, some would say, was never to cater to the population of Cayman Island. It was always an arbitrage which in a sense gave to folks who wanted to come to Cayman Island looking for better surgery at an affordable cost. That I think is really the big thought when you invested in Cayman Island. Has that thought worked into reality for you? Is this model which is a scalable model and you could be scaling it up in some other geographies?
No, you're right. Our first thesis with setting up this hospital was to be a hub for medical tourism for North America. Our idea was to grow this into a 2,000-bed hospital that will treat thousands of patients coming from the US, Canada, Mexico, South America. It didn't work out. It didn't work out because we had no idea of the geopolitical realities at the time. What has worked for us is to run something that's smaller, a lot more efficient, just catering mostly to 80% local population and 20% to people from the neighboring Caribbean islands who don't have an option. So that's a little bit of pivot that we had made, and we're doing okay with that.
Would you be looking at perhaps exploring more geographies? Because, this is more than a lab experiment, right? And somewhere you've invested and you're expanding. Are there any other pockets where you could be replicating the same kind of a model? It may not be for North America, it may be for Europe. It may not be for Europe and America, it may really be for some other geography.
Absolutely. See, the thing is, as an Indian company, we have built a set of capabilities. We run extremely efficient processes. We have very good technology for running our hospitals, and we have an excellent management team and excellent clinical talent. Now, if we're not able to leverage that into foreign markets, then we'll be stuck fighting in a very relatively small pond, even though it's one of the largest ponds in the world. So just like Cayman, there are other geographies where maybe not to the exact demographic and not to the exact margin structure, but there are places where we can leverage what we have and bring our advantages to running healthcare systems there, because providing healthcare is a globally understood problem at, they're not able to provide it at a very affordable price. Only an Indian operator can come in with that right mix of very high quality and low cost. So we are exploring that. But we also have to keep in mind that those opportunities are few and far between. If we can get it at the right price without having to spend too much money, we would explore that.
I can draw a parallel here. Just a coincidence, hospital and hospitality, right? The hospitality industry also seems to be following a model where they are making balance sheets asset light, and when they are using their expertise to perhaps get into more management contracts. You also have done that. Is that the way forward for you now, that what you've done in the past, keep your balance sheet light, look at more management contracts, and keep on extending your expertise going forward?
No, not really. We tried that. The thing is, it works until it doesn't. So the difference between when you take a building and you rent it out to a hotel, there's a lot of fungibility of the asset. And so what happens is, if one doesn't work out, you can always scale into another. But hospitals are always purpose built. So it's very hard to find someone who will take on the asset risk and build something completely designed for just one client and take all the chances that the client may walk away. So the rentals and the yield expectation from the asset owners becomes extremely high. The other problem is that hospitals need tremendous amounts of reinvestment, not just in the medical equipment, but also in the interiors, in a lot of structural changes which asset owners are not always willing to do, or if they want to, again, will increase their yield expectations. So we've not found that to be sustainable for very large hospitals. Now, there are other hospital groups that are trying that, and they will have a lot more luck than we did. We haven't had good luck in that. The asset light expansion is a lot more relevant for us for smaller format clinics, small daycare centers, diagnostic pharmacies. That's where it makes sense. For hospitals, we've just not had a good track record doing so.
So what is the outlook in terms of now the big triggers for the India business going forward?
There are a lot of things we're working on improving our throughput, on increasing the amount of digitization, on increasing the number of patients our hospitals are able to serve. We're in the middle of a 3-year roadmap for eliminating nearly every physical counter in our hospital. We don't want patients to have to wait, to have to walk around with files and paper, to have to sit and wait in queues to pick up anything. So we want all of this to be done either on their phone or to be done on WhatsApp or on the phone call. And this is something that will vastly streamline the experience of going to a hospital and allow us to see a lot more patients in a day.
Okay. Final question. I just wanted your thoughts on what's happening in the Indian healthcare sector. A lot of PE investors have come in, and when we speak to the PE folks, they are profit focused, they are maximizing and sweating the assets. And there's a difference in which how the Indian healthcare sector now seems to be approaching this entire healthcare versus cost management approach. Is there a tectonic shift in the healthcare sector, given that a lot of PE investors have come in and they're very cost conscious and they're very profit conscious? Because healthcare ultimately, it's not always has to be profitable.
So it depends on what level of profit, right? You can either go for profit maximization or you can go for a sustainable level of margin. This is a business where we've always believed that there is a sustainable level of margin that is required for reinvestment, for upgrading the infrastructure, for providing this world-class experience to the patient. And I guess a lot of PE people are aligned around that. Now that there is interest in investment is on net a good thing, because this happens, more infrastructure gets created, more patients have options, and it's not that you are forced to go to these hospitals. If someone comes in and takes over a hospital and it's very expensive, you don't have to go there. There are much more affordable alternatives available, and that's a segment we are looking to play in. But it does, for temporarily cause a little dislocation of valuations. And for hospitals who are buyers, maybe the price is a little high. For hospitals who are sellers, good deal for them. But since we are neither, we're just building our own business and expanding our own capabilities. We can just sit on the sidelines and watch and be, slightly entertained by all of this.
All right, good to have you on board. Thank you so much for giving us more clarity on how business is shaping up. We'll